The Force is with you, young Skywalker.
What's up, everybody? Welcome to the first episode of my new podcast, because crypto definitely needs a new podcast. More just kind of me hanging out with people I find interesting, people I want to chat with. We're going to call it Making Moves with Mayne. Really excited about this first episode. We've got BTC Jack Sparrow. This is part 2. Very excited about this one. I know people have been looking forward to this for a long time, so we've got a heck of an episode for you. Really appreciate y'all tuning in, and I'll talk to you in a moment. All right, everyone, welcome back. This is going to be the first of many, future conversations with my friend here, and hopefully some other traders in the space down the line. This is highly anticipated second episode of, if you want to call it a podcast, we can call it that. With my friend BTC Jack Sparrow. The first one got an awesome amount of engagement. Everyone seemed to love it, and people wanted to know more. A little bit about our last video and kind of BTC Jack Sparrow in general. Obviously, great trader, great mind in the space, who has been dead on accurate. Since the 14K top, the 10.5K top, to this kind of COVID bottom. One of the only people I saw actually predicting that V reversal from the bottom. And the last video we did back in May, we were sitting around 8K, and he was one of the only people who were talking about us moving back towards all-time high. 13.8K was one of his targets at the time, and it seems like the man is from the future. He's got a crystal ball or something, because he's been so bloody accurate, and it's so cool how he approaches the charts. And I really think that's what resonated with a lot of people was he looked at the charts differently, using math, obviously using price action, understanding volume, and just having a very interesting kind of holistic approach that most of us I don't think have seen before. And it's been very cool to watch some of these predictions kind of play out live on Twitter. So I will be leaving all of his information in the description. If you're not following him already, absolutely make sure to give him a follow. So with that being said, Jack, how you doing, man?
What's up, Mayne? I'm doing good. Thank you for having me. How are you?
I'm doing good, man. Really excited about this. I know it's been a little bit of back and forth about getting this going. I've had people DMing me being like, when's the video going up? When's it going up? So I'm glad we're finally able to kind of get this thing going. I'm really excited about this episode. I think it's going to be super fun. So before we get kind of too far into the weeds in terms of looking at charts, seeing how scary accurate your predictions have been, because I'm giving you guys a tip in advance. It's freaky how lockstep this guy's been in with the market. How's COVID been for you? I mean, when we last spoke, obviously, I think things were just, for me at least, things were just starting to kind of lock down. We were going into summer. There was a lot of uncertainty, and then obviously summer was a bit of a bleep show, here in Canada, obviously neighboring the U.S. How are things over there for you? How have you been holding up over the last couple of months?
It was in May that we did the previous podcast, I think.
Yeah.
And back then, I was kind of initially, I felt that it was great to see everyone slow down and generally just seeing people relax. And then by the time it got to May, June, you also saw that people started to struggle with it.
Mm-hmm.
And personally, I had a little bit of a dip over the summer when it comes to COVID, because I just started to feel a little bit trapped, and kind of felt that certain measures were just too harsh on the community, and the numbers didn't validate the actions that the governments were taking. And then it kind of relaxed over the summer, which was very nice. I went to Spain, and there I kind of felt the whole thing, nobody was taking it seriously. And it's at that point where I realized, well, even if COVID is not really necessarily a very deadly disease for many, I realized that it was going to come back. And now we're in, now it's November. I'm personally not struggling with it. The only thing I'm doing right now is I bought a truck. I'm building that truck into like, I don't know, the most luxurious van to just be able to start moving around Europe a little bit in a way that I don't see too many people. And then outside of that, I have my friends who I live with, who I see every day, I cook with every day, I drink with in the weekends. and I have a few friends outside of that circle that I still see, and that's it. And th- th- until until a certain point, that's fine for me. I just kind of feel that it would be nice to have a little bit more freedom, and not going into a supermarket and see everyone super stressed out. But I guess I cannot change that, and that's just the way it is. So I kind of have just to accept it. And even if I think that certain measures are too strong, or that governments are doing a shitty job on regulating the whole thing, I'm not going to change it anyway. So I can spend my energy on anger and being annoyed about it, or I can just focus on what's possible within the current framework. And for me, that is, building that van and eventually just take off and go to the south of Europe and enjoy some nicer weather. And that's making me happy right now. So personally, I'm doing great, man.
That's awesome. I mean, I think I've talked to a few people, and I think one of the toughest things, I mean, this is a trader, kind of self employed thing as well, right? We're accustomed to working from home. It's kind of an isolating job, right? You're not in an office, you're not bouncing ideas off people, going for lunch with people, right? Like you're in a room, you're in front of your screens. And then I think, compound that with COVID, all of those kind of, areas where you might have, a little bit of potential for things like depression or just feeling like, stuck and isolated kind of gets, magnified. Because now you actually can't go do stuff. You can't go out to the pub or out to a restaurant with a bunch of your friends. And, it's been a bummer. And I mean, I think one of the things I'm jealous of with Europe, right, is you have so many places you can go without taking a plane. It takes me like 7 hours to just fly across Canada, let alone drive. And there's not much to see in between the East and the West Coast. Yeah, I mean, we're pushing through here. I mean, I as much as I'm not here to be like, oh, I don't think COVID is real, or maybe the government is overstepping. At the end of the day, there's nothing we can do. You kind of got to just deal with, the hand that you're dealt. Got to play with those cards. I'm hoping things get a little better. I know I saw news about a vaccine today. I don't know how I feel about how fast that came out in terms of its efficacy and safety, but I don't know. I'm not an immunologist. Hopefully things start to return normal sooner than later. I miss traveling. I miss being able to see my parents, and not have to be, go visit my grandma and not have to see her through a plexiglass window, at the home that she's at. So that kind of stuff has really been a bit of a bummer for me. And I think it's super important now more than ever, for people to be focusing on, their mental health. Because trading is enough of a mental grind in terms of stress, being up in positions big, down in positions big, to also have this added kind of external stress going on in terms of COVID. Make sure you're getting your exercise, you're doing what you can, getting outside, getting some sun, reading some books, staying in touch with people, because I think that's super important. I think obviously a good healthy mindset, we've talked about this in our previous video, is super key to kind of successful trading. And that's super cool about the van. That's something I've always wanted to do, is kind of like have like a van or like an RV and go like cross country. Like that'd be a super cool idea. And trading obviously is one of those, businesses that can allow for that. And I think, one of the great things about, as much as there's turmoil going on in the world right now, is we're seeing the resilience of Bitcoin. And this is something we had kind of talked about off of the video, but I'd like to talk about kind of on video now. Is just kind of your thoughts on Bitcoin's place in the market. It's becoming a obviously more traditional asset, in that it's, getting bigger. Every bull cycle, more people are talking about it. It's getting more recognized by institutions. I've kind of been in the camp for at least the past couple of years that Bitcoin is kind of just another risk-on asset, similar to equities, higher beta, obviously, and that there's going to be kind of a correlation there. And as more institutional money flows into the space, that correlation is going to increase. And I personally kind of was like, okay, I think Bitcoin might eventually start trading more like equities, which is not a bad thing. I mean, if you look at the S&P over the last 50 years, it likes to go up. But what we've seen, especially over the last couple of months, because after COVID, the correlation was very obvious. The V bottom, it was like almost 1-to-1. But what we've seen over the last couple of months is Bitcoin is kind of decoupling. Like, is it finally showing the market, showing its participants that, like, hey, this is actually store of value that is an asset class of its own. And in times of turmoil, it's going to be resilient, and it's going to be a good hedge against systemic market risk, where the S&P had a big drop overnight. Gold absolutely nuked overnight. So would love to kind of hear your thoughts on that. And if you want to share some charts to kind of cover it, I'll make your screen big here. It looks like we can see it there.
I mean, what is Bitcoin? The market is trying to figure out what Bitcoin is, and everyone is figuring out what Bitcoin is for them. And I think Bitcoin is something different for everyone. I mean, there's going to be people who see it as the same thing, but there's like different groups who buy it for different reasons. One argument that we can make is that Bitcoin can be seen as a technological innovation, where it's a payment processor and it's competing with intermediaries that provide payment processing to people. And obviously, Bitcoin in the future might be able to do that way better and cheaper than the current system, than a PayPal or the banks. Right now, it's not really made for it, but eventually we'll see Lightning Network do things that we have seen with DeFi, and eventually that's probably going to grow towards being able to cater traditional finance and derivatives and all kinds of things that are currently already having a market, but it's probably going to swallow all these different markets. So that's Bitcoin from a technological innovation standpoint. It's a large network. It's a bootstrap network effect, and it's going to swallow that all. And aside from that, there's people who think that Bitcoin is a scarce hard asset. It's solid, sound money. And for that reason, because there are people who are scared of inflation, whether there is actually real inflation or not, there's people who are scared of that, and they are buying Bitcoin for that reason. Mm-hmm. And we can come up with multiple ways of viewing Bitcoin. And today was this very special day where the vaccine news came out and we saw gold tumble. There's people who think that Bitcoin is just a speculative high beta asset. And if it's a store of value with a high beta, it did something very weird today because it dumped less than gold. Gold dumped through the entire last month's range and is down 5, 6, whatever percent from the top this morning. And gold, Bitcoin is pretty much where it kind of like opened today. It's within the range. And then we see the S&P 500, who's going higher, probably because all the airlines and travel agencies and whatever, those kind of stocks like oil, commodities like oil, etc., they went higher. It's strange. It's a strange world. And then you have the Nasdaq, which is mostly tech. And the Nasdaq dumped, recovered a little bit. Now it's dumping a little bit again. So yeah. if Bitcoin is tech, why is it not dumping with the Nasdaq? So Bitcoin is showing some kind of like really weird, completely uncorrelated price action today, which kind of makes me believe that Bitcoin really is proving or trying to prove here that it's an asset class category on its own. It's not just a commodity. It's not just a tech innovation. It's not just a store of value. It's not just a safe haven. It has all these characteristics in certain proportions, and that makes it actually the weirdest and the most desirable asset, if this can continue, of this time, because everything is correlated to each other in a certain extent, and Bitcoin is just saying, nope, I'm just going to do my own thing.
Yeah, I mean, so what you're saying is we're still early. We got time.
Absolutely. Like, I mean, if the thesis for Bitcoin as a store of value and a tech network that can eventually provide all the financial services that we know in the legacy system, if it can absorb all of that in the near future, in the next 10 to 20 years, where we're not just looking at a store of value like gold. We're looking at a combination of banking, payments like PayPal. We're looking at a store of value. It's pretty insane what it could become, and that remains speculative. But every time that Bitcoin has this halving, and it just keeps on pumping into like for 1 year or 2 years, and then it just stops and continues that every year. Every time it keeps doing that, the probability of it really actually succeeding in that narrative is getting closer. And if I look at the charts, it's just super crystal clear. If I look at the on-chain metrics, it's super crystal clear. People have been buying Bitcoin like crazy, and it's all in the pockets of some very rich people who have been buying in a previous bull run as well. And they've been selling at the top, and they've been reaccumulating. So they're not stupid people. No, they're actually very big believers, and they've been loading up, and there's not a lot of supply left. So naturally, as the halving occurred, and then it took some time. Every time the halving occurred, it took some time before that supply shock really got digested by the market, and then it just goes up. It just goes up, traps a lot of people at the all-time high, and it just collapses into a bubble again, and we just keep on going with that roller coaster. And I mean, Bitcoin has the attention of a lot of important people right now. We're not joking. Like, we can say, like, okay, we're getting attention from all these big firms right now. That's a top signal. I don't think so. I think it signals serious mainstream adoption in this next cycle, and maybe in the cycle afterwards. I think the early adoption phase was until last all-time high. I think we're starting a way crazier adoption phase right now, where Bitcoin is going to become, it's going to become a reserve asset in 10 years, 12 years time. That's what I see when I look at the charts and apply again on the super big time frames.
Well, we'll get into some of your price predictions because I know that's what a lot of people are here for. To a couple of things you said there, I think it's interesting with, I don't think we're anywhere near top. Like, I don't think this is going to just blow off the top here to 30K and then crash again. I think this is much more like 2016, or late 2015, 2016 than this is like 2017 yet. Will there be more market cycles? Absolutely. The top is not in until my dad reaches out to me and asks if he should buy Bitcoin. He is money. So it's interesting what you brought up about, payments, banking, commerce, infrastructure in that sense. And, I also run a recruitment company, and I've seen a huge uptick in a lot of crypto clients lately. And some of them are very heavily funded, and they're tackling, very cool problems on the blockchain. A lot of them center around exactly those things, using blockchain as a way to improve payments, kind of just your traditional banking rails, help bank the underbanked, so third world countries, people who might not have access to banks. Using blockchain, you've got an internet connection, a cell phone, you now can have your own kind of bank. Obviously, payments, commerce, all of that stuff. So with that being said, I mean, Bitcoin is the original, it's the underlying tech. What are your thoughts then on some of the movements around maybe like a JP Morgan coin, like a bank creating their own coin instead of using like a Ripple, for example, or countries potentially creating your own digital dollar? Do you see that as a positive for Bitcoin because Bitcoin was the original technology, or do you see that there may be some risk in them saying, hey, here's what we like about Bitcoin, but we don't want to use Bitcoin tech, it's old, we want to create something new and better?
I mean, Bitcoin is independent, and it's its own thing. So if governments are going to create central bank digital currencies to mitigate the issues that we currently have, which are the fact that central banks print money, they lend it to banks, banks sit on it and don't spend it because there is a recession going on, and they don't want to be low on reserves. And that way the money actually doesn't get distributed, velocity stays low, and the economy doesn't recover. That's kind of the reason why I think they're creating those central bank digital currencies, is basically that people can register a wallet with the central banks, and they can lend money directly from the central banks, and they can pay taxes directly to the central banks, et cetera, and to the government and whatever. And it's a super efficient, smart idea to fix the issue that we have right now. I mean, the Fed printed trillions and then bought trillions in assets, and the banks got money for it, but they didn't distribute it. So this way, they can bypass SWIFT, which is a very slow way of moving money around, and they can inject liquidity where it's required pretty efficiently, pretty quickly. So the way we are gonna be dealing with currency is I think it's gonna change, and it's gonna change very quickly. Does it change anything fundamentally to Bitcoin? I don't think it does, because they won't be able to bootstrap a network effect that is decentralized the way that Bitcoin is, because there's no reason to bootstrap a new network that's decentralized, because we already have Bitcoin. If you're going to bootstrap something that's centralized and where there's going to be a lot of printing, then it's not a reserve asset. It's not a hard asset. So people are not going to be looking to be investing in it. So basically, the way I see it, if we're lucky, and I think it's going to move that way, I'm honestly thinking that Bitcoin is going to absorb the entire fucking world in due time, is that this entire infrastructure that we're going to move into, which is a digital payment infrastructure, is going to require a reserve asset. And it just doesn't make sense to use an analog reserve asset like gold in a digital system, because we want to be able to, we're going digital. And right now, Bitcoin is, the only reserve asset in crypto that is so big, probably too big to fail already. It's 10 times, 100 times bigger than all its competitors, and it does the very basic job it needs to do very well, which is secure the money. Yeah. And from securing the money, we can move forward to building second layer implementations, and perhaps maybe even upgrade layer one on Bitcoin to become faster and build all these products on top of it. Just like the internet was built with very simple protocols, and eventually, protocols were built on top of it to create what we know as the internet today. And basically, Bitcoin is even an extension of that, because it's built on the internet. So yeah, I don't think that it's bad that they're doing the central bank digital currency thing. I think it's just going to drive us to a digital reserve asset, which is good, because it's going to be Bitcoin, I hope. For now.
So to summarize all that, Peter Schiff is going to be real mad by Bitcoin. So I think this will kind of line up well with what people want to hear from you next about kind of terms of your price targets. So there's a few traders I follow who do really kind of macro outlook on things. You're one of them. What are your thoughts on, this is not something I ever use, like the logarithmic chart, for example. I'm much more of a kind of price action, level to level kind of trader. I buy Bitcoin, I own Bitcoin, I stack Bitcoin, because I think it's going up long term, but I'm not so much worried about, in terms of my cold storage, my stack, I'm not really worried too much about the up or downs we're seeing right now. It's more like when price is going absolutely bananas, I sell some spot, and when it corrects 20 to 30%, I buy. But you're one of the people who I've seen, at least, who really tries to macro, let's look at this thing from a really long-term perspective. Where could we be 3-5 years from now? What are your thoughts on kind of the diminishing returns, potentially on future market cycles for Bitcoin? Like, we obviously had, 100 to 1200, then we had, $300 to 20K. This time we have 3K to wherever this high is going to be. Do you have any sort of predictions on where this all-time high, this new all-time high, might top out at? And then how far will it correct? And then do you believe that these market cycles are getting smaller, just kind of based on that logarithmic growth chart and just the law of diminishing returns, over time?
I find it very difficult to get an answer, but I have my thoughts on the subject. Like, I see a lot of people talk about lengthening cycles, and honestly, I have no reason to believe cycles are lengthening. I don't even know why people are saying that, because literally, if we look at what has happened with Bitcoin, is you have a halving, and then you have a year or a year and a half of a crazy parabolic run, and then it just flattens out for a while, and then it has a halving, and it does it again, and it's done it in the same amount of time. So there is no pattern there that I mean, of course, there's people who say that it's going to take more and more money to move Bitcoin up, et cetera, et cetera. So, to keep going as exponential, you're going to have to attract exponentially more amounts of money. And that's what Bitcoin has been doing. And surely the run of 2013, 2014 was not as steep as the run before that. But we got to consider that if you compare those two moments in time, we were not dealing with institutional money. We were not dealing with mainstream adoption. We were not looking at all these things. There were early adopters, speculators, and now it's 2020, and big hedge funds are saying buy Bitcoin. I think I just saw something on Twitter, and I forgot the name, but Raoul Paul said the fact that this guy is saying this is the nail in the coffin for any other asset. And I tend to really believe what Raoul says, because it confirms my bullish bias.
Of course, yeah.
But then we can look at metrics that kind of say something about whether it's actually true that it takes more dollars over time to move the market cap of Bitcoin by $1. So I have this chart up here, which pretty much comprises the entire history of Bitcoin. And what we're looking at is the Bitcoin market cap gained per dollar invested. And the blue line is pretty much over time, indicating at that moment in time for the entire history of Bitcoin, if you invested $1, how much that raised the market cap. So you can see here in 2017 and in 2013 and in 2013 again at both those highs, every dollar invested into Bitcoin on average, estimately on average, raised the Bitcoin market cap by $4. And if we take a moving average of that, which is this green line right here, and then we have the orange line right here, which is the average all time. So it's the cumulative average. It's not a moving average. It's the entire history. You can see that the orange line has always been above 1. So basically $1 invested always created more than $1 market cap gain. And if we look at the 200 daily moving average right here, the green one, we can see that there is a potential trend upwards. And that would suggest that for every dollar that we invest into Bitcoin, over time, Bitcoin becomes more and more expensive. The market cap goes up exponentially eventually. So that means that people are either, it shows that Bitcoin is very deflationary, and it also shows that either people are very strong hodlers or that we're losing Bitcoins in the process somewhere, but somehow there is less Bitcoins being circulated, and for that reason, price just requires less money to move higher. So you can see that there's this bottom right here, and there's this bottom right there, and then there's this high here and this high here, and it's clearly looking, and especially if we're right about the cycle and that we're going to see a new bull run in the next year, then we can probably expect that this green line is also going to go higher than in 2017 and 2013. So basically, every dollar invested in Bitcoin is causing the Bitcoin market cap to go higher over time, which is extremely fascinating. And the other thing that this thing shows is that the cycles oscillate between very specific mathematical levels. This oscillator is almost nearly perfect for timing the tops and the bottoms. And my theory behind that is that Bitcoin has a limited supply, so it can only move between hands so many times. Of course, if you and I are just trading in some fucking choppy range, I'm going to sell it to you, you're going to buy it from me, I'm going to buy it back from you, etc., etc. So nothing really is happening, and we're just chopping around in the range, and it's a zero-sum game. But there is Bitcoin, and there's a lot of people who accumulate right here, and then they say like, hey, I'm not going to give this back to you for a while, and then the supply is in what we say the strong hands. And as Bitcoin starts to rally towards its parabolic blow off top, The same people who've been accumulating this distribute it, and we can see this on chain. It happens every time. Accumulate, distribute, accumulate. No. And this has been going on for a long time. And this is probably going to continue for a while. And as long as this blue line oscillates between these extremes, we kind of know that the market is trying to squeeze as much strong hands and weak hands at the same time. So let me rephrase that. The strong hands are going to try and squeeze as much weak hands as possible and distribute as much as they can and accumulate as much as they can. And as long as we keep doing that, the market is very efficiently distributing, accumulating the available supply. And as long as new buyers step in, and it's just going to keep growing. It's pretty unreal to see the data that confirms that over time you need less dollars for a $1 market cap gain. And as long as that continues to go up, I don't think that, to answer your first question, I don't think that the cycle necessarily has to have diminishing returns. And what we do have this time compared to last time is that the entire financial world is actually starting to take Bitcoin seriously. And that was not the case before. Before, it was the smart people, the people who saw what Bitcoin could become. And now Bitcoin is probably going to try and prove to all the people who didn't believe that it's actually a real thing. And there's a lot of more smart people coming into the market. We've seen this with, there's a reason why PayPal is positioning themselves to provide Bitcoin and to be a custodian and to be an exchange. They signal they want to. That's where they are heading. That's the direction of their company. They're innovating. They're saying like, okay, this Bitcoin thing could become something. They wouldn't do it if they didn't believe in Bitcoin.
I think it's so cool to look at the market like this, and like for someone like me who, I'm very much just like a purely technical trader. I'm not looking that far into the future. I don't do any sort of on-chain metrics analysis. Clearly this might be to my detriment and I need to kind of expand my horizons a little bit here. But it's just so cool to have this perspective that you've been following for a while now, and now seeing it not just play out in price but also play out fundamentally with things like PayPal positioning themselves how they are, with Square, with Michael Saylor, buying these large quantities of crypto, of Bitcoin. To me, I just like, this is all just like so exciting to me, right? Like, I think people forget, like, it's easy if you've been in crypto since 2017, you've seen 3K, you've seen 20K, you've seen ups and downs. If you're just getting exposed to Bitcoin at the first time, right, it's less than it was at its highest. So technically it's still cheap. So I think that kind of cost bias is something that gets ingrained in us as people who have been in the market for so long, being like, well, I could have bought at 3K. So I know that Bitcoin is at 15K per right now. It's not cheap, but it doesn't mean you should not be looking to buy at these levels. I'm not saying blow your entire load at 15,000 here, but on dips, I think the trend, high time frame, very clearly is up. And any sort of major corrections that we get, even at these prices, I think you want to be building exposure. I think the trend lines up. Obviously, the volume data and the on-chain metrics are lining up. The fundamentals are lining up that this is going to go much higher. And only people who have been in crypto think Bitcoin is expensive right now. Someone who's never seen it before, in my opinion, they say, okay, well, it was 20K, now it's 15. Sounds like I'm getting a deal. So to me, I think this is just like such a cool time to be involved with the market.
For me, it's crazy because, I came into crypto in 2017 and I've been through the entire grind of the last phase of a bull market. I bought my first Bitcoins in Q2 of 2017, bought Ethereum, et cetera. Everything exploded. I lost a lot of it. And then I really started to learn how to trade. And my goal was to say, hey, I need to understand how these markets work, and I need to understand what Bitcoin is, not just as a trader, but from a fundamental perspective. And what was so cool for me is that there's all this data available about what's happening on the Bitcoin blockchain. And you can look at it and you can subtract patterns and you can just see how Bitcoin move. And once everything's pointing in the same direction and you also have a fundamental belief in what Bitcoin is and what Bitcoin can be, and a lot of people say, no, Bitcoin is slow, Bitcoin is blah, 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 but it makes it anti-fragile. Because if Bitcoin wasn't that slow, it was not as secure. And that means that Bitcoin obviously has its pitfalls and it needs to develop and it needs to create second layers or maybe upgrade the first layer, et cetera, et cetera. But it's doing the important job, which is to be a secure decentralized network. It's doing that very well, and that's the reason why it's still alive 12 years later. If it didn't do that well, it would have been dead and it would have had no chance of succeeding. So it's still here and it's still growing. And if it's really, to your point where you were just saying that, if it's a tech stock, if it's a technological thing, then the fundamentals have to align. And we can see this happening on chain. We can see it happening with a PayPal, a MicroStrategy, Paul Tudor Jones earlier this year. And it just makes me incredibly bullish. I'm not saying that we're going to see the same kind of returns that we've seen before, but I would not be surprised if we actually do. I mean, if we look at these charts and we consider, the similarities, and I should probably grab this chart, yes, maybe we have lengthened cycles or dampened volatility, but that still means that if we follow the kind of trajectory that Bitcoin has been following, that, Bitcoin is gonna get at 200K, 300K. It's gonna keep on going. And I would not be, a lot of people think that Bitcoin is going to top out around 100K on the next cycle. And I just don't simply see it. That's a 2 trillion market cap. Maybe it needs a pause and maybe it's going to correct there. But if really pension funds are going to start investing in it, and if banks are banks are in the US are allowed to be custodian now. PayPal is a custodian. I think we're going to see Lightning Network, Lightning Pool. In fact, Lightning Pool is a super cool, similar thing as what the DeFi shit on Ethereum and whatever it is, but on Bitcoin, it's It's fully without a custodian. You can literally be your own bank on the Bitcoin chain and lend people money or lend people for money, et cetera, et cetera. Fully integrated, your own keys, no intermediaries, as with WBTC on Ethereum, where you have those Bitcoin tokens on Ethereum. I mean, these still have a custodian, BitGo, which kind of have the keys to your Bitcoin, and then you can go into Ethereum and trade with them and lend them and pull them and whatever kind of stuff you can do with it. And I don't feel safe with it. But with Bitcoin, we're going to actually see that we're going to be able to do that completely ourselves. And I think that's a key factor for adoption. And that there's going to be services and applications that are going to sit in between to provide these services to people who don't want to bother with it. Sure, that's going to happen, and it's probably going to be the majority of the volume. But the fact that the possibilities there to completely be your own bank, I think that's what's game changing about Bitcoin, and it's going to happen. And I don't know. I think we're literally entering mainstream adoption here. So we're kind of like at the beginning of the S curve still. So if you're into S curves, you should kind of probably, it's kind of hard to imagine that this could actually become an S curve, because that means that it needs to go up here. Like, that just seems too wild to me. But we're gonna go up, and we're just gonna, I don't know, I'm gonna stick to my metrics and my indicators and hopefully make sense out of it, and maybe not. But I'm not gonna make the same mistakes as last time, and I'm definitely gonna take
I think it's kind of silly to not, after seeing what Bitcoin has done, cycle after cycle, to not be bullish, not just at this point in time, but just generally long term. Like, being bullish on Bitcoin to me is like a positive EV bet. Like, I mean, you could be wrong, sure. But the potential upside of being right to me is astronomical. I mean, this chart is crazy. I don't think people understand, potentially the potential of, how high it could go, if it does become that global reserve asset. Who knows, right? Who knows what's going to happen? But to me, the potential for upside is far outweighs the potential for downside. And I think, at this point in time, it's exciting. I think if you're here, you should be stoked. I think if you're here, you need to be spending all of the time where the market isn't just going straight up, learning, studying, practicing. If you were here through the 2017 bull run, take the lessons that you learned, right? The cuts, the scrapes that you got in that last cycle, and make sure you don't make those same mistakes again, right? Because we all made mistakes. I cut my teeth in 2013, 2014. It allowed me to be a whole lot better in 2017, and I plan on being even better this go round. So I think anyone who's like looking at this being like, I've missed it, I'm late, I think you've got to zoom out a little bit, and look at the bigger picture and look at the potential. So maybe we can talk about some of your kind of price predictions and things like that real quick before we move on to kind of, where you might see Bitcoin going in the next cycle. And I'd love to look at some of the charts we talked about last time and just kind of see how they've progressed, because I know that they're scary accurate. But what are your thoughts then for other coins? Ethereum's, the Litecoins, the not that I own any EOS, but the EOSs or some of the newer altcoins, that are out there. All the old majors, right? The old guard, the new altcoins, things like DeFi. Do you think these have a place in the future, or do you think these things kind of slowly fade away as Bitcoin remains, kind of the only game in town, or becomes the only game in town?
No, Bitcoin definitely is not going to be the only game in town. Because we're gonna need we're gonna need infrastructure to do what Amazon is doing, but on a crypto network, decentralized with a different consensus system that's going to be a lot faster, maybe not as secure, but a way of delivering the same kind of products that we have today on the internet, and we will have to push that into encrypted crypto networks. So that's going to happen, and I don't know who's going to succeed in doing that. For now, it very much looks like Ethereum has a very big spot to do at least some of that, and ETH 2.0 is coming, so that's some serious scaling if they manage to pull it off. It's just going to be very difficult for them, because they're literally trying to move from one chain to another chain, and for a certain period of time there's going to be two chains, and once you move it into the second chain, you can move it back to the first chain, and so it's a very difficult thing they're trying to achieve right there, and there's a lot of competition going on, and it may not seem right now as there is any good competition to Ethereum, or in terms of volume there's not a lot of, doesn't really look like Ethereum is going to lose, but they could. I think Ethereum is a kind of like one-stop shop for a lot of things, but it's probably still going to need second layers on Bitcoin to do very specific calculations that Ethereum was not specialized for. It was not optimized for. So I find it very difficult to really say anything about what's going to happen in that scene. But when it comes to a reserve hard asset, I'm not sure if Ethereum can become that. It could, but Ethereum doesn't really know yet what its monetary policy is. It's changing its monetary policy, and a lot of people do believe that it's going to try and be deflationary and be a hard asset and be secure, but some other people may not believe that. And until we kind of know, that what we can expect with Ethereum, it might just be very difficult to speculate on it. So Ethereum is one of those coins that I think can go on insane rallies. It could even overtake Bitcoin's market cap, or at least become equal to it. And then at the same time, it could rally all the way back down as it did last time. And I think it could keep doing that because eventually it's trying to keep up with Bitcoin, which is for now the big money absorber. And I think it's going to stay that way for a while. But obviously, there's other tech out there that's better than Bitcoin's tech. It just doesn't succeed as much in getting the network effect going, and it maybe is not as secure. So it's really difficult for me to say anything about it.
Yeah, like I'm kind of the mindset that maybe not Ethereum as much because there is that technological aspect to it, but things like Litecoin and a lot of these other coins that have been around that maybe don't necessarily have a valid use case anymore, there's still a value in that they are a means to transfer wealth, right, from one person to another. And people who are manipulating Bitcoin, they're going to be using other altcoins as well to get that same effect. You know damn well when LTC pumps, when EOS pumps, when all these other coins pumps, XRP, there are going to be bag holders, that are waiting to just get out, and then there's going to be new bag holders made. So, in terms of market cycles, I think if you look at a lot of these majors, they do generally still cycle with Bitcoin, but I think it's more of a asset wealth transfer thing than it is they're actually appreciating in terms of what their value is. I think Bitcoin is the the big kahuna and the one that you want to own. As much as I'm bag holding EOS, like 80% of my portfolio is always in Bitcoin, because I think that's the one that long term I don't care about as much of the kind of fluctuations, I guess you could say. But let's talk about a little bit about some of your predictions. So you had a few crazy ones. You were one of the first people that when Bitcoin had that COVID dump, that basically you called it, and I don't think I saw anyone do it as publicly on Twitter. Basically saying, hey, I think that's the low, and I think we're going to go straight back up in a V. And me and most other people that I talked to were expecting some sort of lower high, another low. I was looking at stocks. I was like, there's no way this is just the bottom. But then, you kind of enlightened me. And after our last podcast, I basically just flipped full bull. I know a lot of people, they'll see me put shorts on Twitter. Like, what are you doing? You're shorting. Like, when I'm putting a short on Twitter where I'm like, oh, I'm going to take a short here, like I'm risking 1% to 2% of my portfolio. I think people also forget that I can short with US dollar collateral, not even Bitcoin. So it's not like I'm losing Bitcoin, every time that it goes up. More importantly, what I do is once we started hitting 13 and 14K, I started selling some spot. And I will continue to do so right up through 20K because I do expect corrections along the way that I can reload on with more size. I think that's just smart when we're going up steep like this. But, to each your own. If you're not trying to time the ups and downs, I think, hang on for the ride. But no one kind of called this V bottom to the extent that you did, and not even the V bottom part was crazy. But what's even crazier to me is you're like, it's not just gonna V bottom, like this is going to like $14,000, and then it's in like a straight line, and that's exactly what it did. So I'd love for you to kind of walk us through some of your charts that you kind of use to make those predictions, and just kind of maybe we can look at some before and afters.
It's going to be very difficult to grab everything I had at my disposal back then. But I mean, well, the biggest reason for me to expect the March drop was the fact that we had this top. It was a clear resistance. And I was looking at it, and it just seemed there was a lot of market selling going on. It was a lot of market selling going on as we actually started to pivot off 6K. And when we were at 6K or 6.8 or whatever it was, I was actually this idiot who said, like, we're just going to keep on dumping. And I was looking at on-chain metrics, and there was not enough accumulation that happened. So I was either of the idea that we're just going to at some point dump very hard, or that price was going to go sideways for a stupid long time to make sure that this accumulation, this movement between supply, between weak hands and strong hands could happen. And like this was moving up, but it was not very convincing. I was in spot, and then I shorted. Like I took all my Bitcoins off the table. I was in full USD exposure at this high. And as we started to come and move down, I saw even more aggressive selling. on derivative markets, and so much passive liquidity on the books, which caused funding to stay positive, even though there was a lot of volume being dumped into those bits. So I went back to my thoughts about, okay, well, the balance between strong hands, weak hands on chain it's not there. It's not skewed. It's not shifted enough for a bull market yet. And at that point, there was I don't know, there was like just on BitMEX, there was like 1.2 billion in open interest, and everyone was just like sheep, just buying the dip, and it just continued. And at that point, I was like, okay, well, if someone is selling so aggressively, they're not going to accept not getting those Bitcoin back, and those people buying it are not going to give it back on by themselves. They're going to have to be forced. So at that point, it became clear that we were gonna get a massive liquidation, and I was targeting 5 to 6K, and that's where I bought back my spot, closed my shorts, and then I was willing to go on leverage, but I was too scared because something Joe said, there's probably still some minor collateral. And boom, 24 hours later, we dumped to 4K. And that was the minus collateral. Just miners who bought the dump, who like to buy Bitcoin at levels that are close to their production price, because that's generally where you buy a commodity. That's if you produce oil, you're gonna buy your own oil. Or other people their oil if it gets to your production price, because the chances that it's going to be trading higher or later is it's quite likely. So it dumped here, and it just fell into the bottom of one of my GAM boxes, and I had a few auto drawings that hit levels that I was looking at since I think July. So I was like, well, there's like a bunch of systems, and we're seeing the massive liquidation, which is enough to pretty much accumulate so many Bitcoins. I think about 2 million Bitcoins moved in those couple of days. 2 million, which is almost the entire supply that's actually actively traded. So how much more reason, if you think about game theory, was there to push price lower again? Because literally every trading participant got wiped. So basically, that was the reason for me to say, okay, well, there's going to be no resistance, because the big hands, the strong hands accumulated everything they could, and it's just going to be one giant supply void the other way around. So basically, just balance this entire move right here to the upside on a 1-to-1 basis, or maybe not 1-to-1, but you get what I mean, right?
Absolutely.
So as we started to break out here, I don't know where this is going. I honestly think this could go to all-time highs this month. It could go there next month. It could go there in January. For me, I have a time pivot on the 4th of Jan, which has a high around 21,000. So I expect price to trade very closely to that level by the new year. And whether we're going to see a dip before that, I mean, it seems likely to me. There's this time pivot on the 23rd of November, give or take a few days, that I think could impose such drop. And then I think we're going to see the classic drop that we always see in Bitcoin on bull rallies. So it's going to be in the neighborhood of 25, 30, maybe even 40%. Which kind of, I don't know, if we look at it, this is what I also like to do, like where would there be a good support? And right now I'd say it's around 12. It's a huge support. That's a huge support. Like we hit it here, we hit it here, we hit it here, and then we motored out of it. So you would think that needs to be retested at some point. And if it's going to retest it on one of those mega dumps, then it's probably going to be a 40% dump. So, you just grab 40%, and then we grab this support right there, and then we make sure it's 40%. So that's probably in the neighborhood of 19K. So I think this is going to go up to 90K and then dump back to, 12, 13, 14K. And pump back to 21K, and then dump back to 16K, and then everyone's so wrecked, and everyone lost even more Bitcoins, and the strong hands have more Bitcoins than they had before, and that's just gonna drive this whole parabolic thing even more. I think that's the key. What Bitcoin has done every time it started to teleport out of this bear market, it just nukes a few times up and down, literally wiping everyone. And the end result is basically that the strong hands and the people who have ability to move the market just have more, and that means the supply and the demand is skewed. The distribution of it is skewed even more, and by that, it's just going to continue more and more parabolic until they start to drop, which they actually, if you look at the on-chain metrics, they pretty much start to slowly take profit once it really leaves the bear market. So let's say price is going to move up from here to 19K, dump back to, I don't know, 13, up to 22, and then back to, I don't know, 15, 16K. This moment right here, this is literally where in the past, whales have started to take profit and reduce risk, and they keep doing it until the high, and then they start distributing in the first 50% of the bull market range, and they reaccumulate in the bottom 50% of that, bear market range. And I don't think, those are unpredictable things. It's literally market dynamics, an efficient market that is trying to see adoption, but it cannot move higher than to the point where all the supply has been distributed, and it cannot move lower than where all the weak hands have distributed their Bitcoins again, because if it's accumulated again, there's no reason for anyone to dump it if they really think that it's going to go on another bull run. And once we start seeing that, we know that it's probably very likely that after the next cycle, we're going to get another cycle, et cetera, et cetera. But that's very far in the future. I think right now here, Bitcoin looks strong. It could dump to 14K from here. I don't know. But I honestly think it's just going to continue up. And it's going to continue up for a while. And everyone's waiting for that 40% pullback. And it's going to happen. But everyone's waiting for it now. And everyone thinks it's going to be at 10K.
It usually happens.
And I don't think, if I look at this chart, that price can go to 10K.
Yeah. It's so, I mean, I bought some Bitcoin in on that dump. I also shorted the top, but I closed it at like 8 or 9K. I didn't think it was going to go that low. And for me, it was just like, when I see blood in the streets, I'm just like, I'm buying here, right? Like, if I could buy any Bitcoin I have a family email chain that I've been sending out since all-time high, basically. And if I had just traded as well as I told my friends and family to trade it, I'd have more money than I do now. And it's because I did a lot less. I would update that like once a month or once every other month. And the consensus was, after the first drop to 3K, I was like, buy now. And then when we got over 10K, I'm like, probably start taking some profits. And then, we started correcting. And in my last email was like, I think any Bitcoin you can get under 6K is an absolute steal. When you see that big of a correction, to me, that's the time to buy. And I think, kind of like what you said here, we're going to see corrections in the bull market. In my opinion, you need to be taking profits when we're going parabolic and adding on when we see any sort of double digit and beyond correction. I think that's the way to play it, as opposed to trying to catch the exact bottom and the exact top of the move.
Yeah, that's what I've been telling people as well, that you should stop trying to time the tops in this market unless you have a very good system that's very reliable. The thing is, this market can correct in a day and then leave you in the dust 30% higher the next day. That's really where this market is getting at. It's not now, it's maybe not today, but at some point this is going to happen. You're going to see a 30% correction and you're going to see it retrace it entirely. What's more important, and I agree with you, is that taking profit at resistances that you clearly think that are resistances is just not a bad idea. And the way I deal with this is, I build a spot position, and over time, I slowly start adding leverage on big dips. It like the dump to 10, well, below 10. that was a very obvious support level for me. And I added degenerately a lot of leverage. Probably, I doubled my leverage. It was like 0.5 on my total account. And then I double it to 1. So basically, my entire portfolio got a multiplier on it from that point to here. And I don't mind taking off some of that exposure. In fact, it's a very smart move. And then once a correction occurs, I'm going to do the same degenerate move again by adding a leverage to my entire portfolio after Bitcoin took a 30% dump, because the chances that it's going to dump much further are very small. And, that way I'm compounding at a very low rate, but you just have to do this 5, 6, 7 times, and then you're going to see the real returns come in. And I've been doing it since, pretty much the bottom of 2018, but very successfully since the 14K top in 2019. And it's a way to very slowly on the macro take huge swings and double, triple, quadruple your portfolio in a few months, in a half a year, in a year. But if you do that consistently over time, a 4x and then another 4x and another 4x, that's a lot of x's.
Yeah.
So yeah, buy the dips and scale out, man. Like, don't be greedy, and you might end up buying again at higher prices. That's fine. You might also end up buying at lower prices, and it's probably gonna benefit selling some on the way up and buying on dips.
Exactly. I mean, if let's say you sell some at 14K and it goes to 15K, but then it drops to 12K, you're up. Even though you didn't sell the top, right? You're getting in below where you were, and there are going to be dips that you miss time. But if you're focusing on, 15, 20, 30% dips, go look at Bitcoin's history on the BLX chart. That's you rarely see it. And just like on this last kind of major pump, right? I think we had like 2 back-to-back 15% days, and then we had like a 10% correction, right? Like, you rarely see Bitcoin go up 30% plus or drop 30% plus in a single day or like 2-day span, and then not get some sort of 20, 30, 40% correction. And like you said, it's quick. It will correct, you'll be doom and gloom, and then it will retrace that entire correction in a day. It will usually engulf it in like 2 candles, and then it's going higher. So I think the problem that comes in this market, and this is something I had issues with when I first got involved, is the kind of attachment you get to altcoins. I think people see these altcoins go on these crazy runs. They have that altcoin that 10x's, 20x's, and they want that same, they want to hit that home run again. I think it's like very difficult to get a 10x that you hold on to the entire way, get in there with sort of meaningful size. But I think a lot of little wins over the long term are way easier to do and going to be more beneficial for your portfolio long term than trying to hit a home run, like you said, right? So getting a single or a double every time, as opposed to going for the grand slam every time, like a 4x. Hey, I might not have 10x my portfolio, but if I can 4x it 3 or 4 times, over a certain period of time, you're crushing it. So I think that's very important advice. Not that any of this is financial advice, but to take profit. On the way to 20K, I didn't sell any Bitcoin over $18,000. None. I started selling above 10 because it just started getting crazy. Everyone was texting me about Bitcoin, and so I just started selling 10K, 11K, 12K, 13K, 14K. I think I sold my last Bitcoins at like $16,000. And then we had that huge dump, and then I shorted with leverage, like in the 17K area, on the way down, and then I just focused on shorting in most of the bear market. But like, you don't need to catch that entire move, right? It's all about getting the meat of the move. And if the bottom was 3K and the next top, let's just speak hypothetically, is 100K, if you get long from 15K to 70K, I think you've absolutely smashed it out of the park. So I think people need to kind of step back sometimes and reanalyze what they're looking for and know what you're doing. Are you investing in Bitcoin, or are you actively trading it? Because those are 2 very different things. And as you'll illustrate here, I mean, Bitcoin has these major corrections all the time.
It's super common, and we know it's going to happen. So a lot of people are like constantly asking me, do you think we correct from here? Do you think we correct from here? Do you think we correct from here? I don't know, man. Like, all I know is if I see that correction, that's, like a place where I'm gonna be like, ooh, nice, okay. And by not overexposing myself to the upside, making sure that I have a portion of my portfolio in cold storage, and then I have a portion on an exchange where I trade with leverage, and I just make sure that I just build size, and I don't need a lot of leverage, and I can run through pullbacks if I didn't scale out enough. But the fact that I want to scale out makes me just susceptible to buy those dips, and it's just going to happen. I don't know when it's going to happen, and everyone is always asking when, and the matter of fact is that I don't know. I literally don't know. I tried to make it up, and if I'm right, I'm going to be parading around Twitter and say like, hey, look, I'm so cool. But the reality is, I can only predict it so much. In fact, I just probably will be wrong on those tops and bottoms a lot of times, and I just want and wait and see whether they happen.
Well, you got to let price show you what it wants to do, right? And when it
Yeah.
starts correcting, when market structure starts breaking, then yeah, now it's time to pay attention. And you've got a whole army of people telling you you're cool on Twitter now, by the way. As I'm sure you've noticed, your engagement is off the charts. Do you enjoy that? Like, because I'm not saying you were obscure before. Obviously, you had a lot of followers, but I mean, absolutely, in the last year, your account has skyrocketed. Your engagement levels have skyrocketed. How do you feel about that? Did you prefer being kind of unknown and being able to get like kind of a better gauge on sentiment? Or because now if you post anything, it's hundreds of likes almost instantly, it's hundreds of comments, people spitting their bias at you. Do you prefer how it was now? Do you like it better before? What do you think?
I guess everything has its pros and its cons. The cons in this case is that it can be a real headache to just keep up with everything everyone's saying. And people just become very aggressive if it doesn't always align with their thoughts. Opinions are explosive on Twitter at times, especially when the tension is high and people are very emotional when the market has done things that they didn't like or whatever. And then the other side, I also enjoy it to a certain extent because I do get appreciation for my work from people, and I do get to peek into in people their minds and see how they think. So it helps me shape narratives. And I do analyze some of my Twitter data. So right now, for example, I see an uptick in the level of followers. Not necessarily the amount, but I see that there is people out there that clearly are getting their feet wet for the first time. It's super interesting for me to witness that because that means that there is actually outside money, outside of institutional money flowing into this market as well. So it helps me.
Bags.
Yeah, coming to buy our bags. It helps to understand how in what phase the market is, and the fact that there's new retail for a lot of people who are having bear market PTSD think, oh shit, that's a top. For me, it shows that that price is showing intent and that other people are picking it up, and those are pretty much the early adopters of this next bull cycle. And the other thing that it does help me with is that people just send me information that I would otherwise not see. So sometimes I'm stuck with what the fuck is going on, and then someone sends some information to me and I'm like, hey, wait, that kind of fits into the way I see the market, or it's the missing piece of the puzzle, or I just start researching something. So it's a very nice way for me to interact with Twitter at times, just to get IDs and feedback, to spark my thoughts. And it has downsides, man. Like I spend so much time on it. It's literally insane. I think I have like I don't know. I think I have like 4 hours on average screen time on my phone. I checked the statistics last time. It's like, dude, like it's disgusting. And like I'm not monetizing my anything on Twitter, whereas a lot of people have some kind of things going on. For a long time in my head was it like, is it worth it for me to keep up this insane amount of content and flow of thought. And it is because it one on one way in one way it keeps me accountable, and it keeps me level checked on the market. If things go wrong, I'll have to force myself out there to admit I was wrong. So yeah, it does feed me and it does cost energy, and but it's definitely worth it. Otherwise, I probably wouldn't be there anymore.
I have kind of a love-hate with it, right? There's some days where I'm just like, I kind of wish I was nobody followed me and I just was, on there following people, consuming information, didn't have to deal with trolls, didn't have to deal with expectations. And, I've gone through waves where I did monetize my following for a bit. I had a group. I no longer do that. I stopped that actually back in June. Because it's funny, at first I kind of had that mindset you had. I was like, well, is this worth my time? I'm putting all this stuff. I had a Discord, all for free. And I'm like, I'm spending so much time doing this. Why don't I get paid? And then I got to a point where I was getting paid and I didn't like it anymore. It kind of soured it a bit for me because I would spend so much time, and I love helping people. That's why I did it in the first place. I love helping people kind of navigate the basics. Because there's so much misinformation online. I was like, hey, I can kind of help show you some doors to go through, and then you can progress from there. And it's amazing what people who have, I don't want to say learned from me like I'm some master educator, but people who I've kind of pointed in the right direction, shared some things with, being like, hey, I learned from this guy, and check this out, and try this. To see what they're doing now, it's amazing. And I've made such great connections. But the paid group thing kind of took me, it kind of made me salty to wanting to do stuff, because I would spend all day giving, and then when it came to my own trading, I didn't want to look at the chart after doing a 2.5 hour live stream and talking to people about charts in Discord all day and telling them what an order block is. By the time I sat down to actually manage my own money, I didn't want to do it. So I kind of wiped my hands from that. I mean, like you said, there's positives and negatives. I love getting the DMs from people who said I've helped them. I love people who share information with me, like you said, being like, "Oh, I didn't look at it that way." The positives do outweigh the negatives, in my opinion. I mean, heck, I when I went to Europe, I was able to meet up with so many people like through the internet and go for beers and get a go to cool, take me to a restaurant or help me get into a bar and come party with me, just have a good time.
Yeah.
I'm like, that's amazing.
I wasn't cool enough for you back then.
I didn't spend enough time, man, and I will be back once they allow us, and we will definitely have a beer.
I'm just kidding with you.
And it's just crazy, and it's such a cool space, and I think we're also fortunate to be here and be where we are. And I'm so excited to see how your account has grown, and the amount of detail and effort that you put into the stuff you post. I don't think people fully recognize how much work it takes and how much alpha you're sharing for free, not asking for anything in return. And I think people got to make sure not to take that for granted. Like, at the end of the day, it's just another human on the other end of that tweet, sending that out for free, not asking for anything in return. So I said this before and I'll say this again, you want to follow this guy, you want to pay attention to the stuff that he's sharing. Sometimes he spoon feeds it to you, sometimes he gives it you a little bit more for you to figure out, but there's a lot of golden nuggets in the feed. And watching some of these things play out, like this chart that we have on the screen right now, has been mind-boggling for me. Because, as a purely technical trader, I've never been one to do this kind of stuff where it's like, you're analyzing a fractal, being like, okay, this looks like this. And to see it work so well is just nuts to me. So why don't you talk to us a little bit about this NASDAQ fractal that you found? And this is, go watch the May 6th video, guys. He has this exact same chart up, but we're sitting at about 8K at the time.
Yeah, I posted it on Twitter when it was literally at 5K. It was part of my bottom analysis initially. But essentially, I really believe that markets follow not predetermined, because they always do different things, but when they symbolically link up in different phases of the market and different structures in the market, and you can align them, and you can align a narrative and a catalyst for upside or downside. You can find the purpose. Price action always has purpose. Even if it's ranging very slowly, there is something happening. And a lot of people say like, oh, well, price is consolidating and it's not doing much. People must not be interested in it. And the matter of fact is that at that point, there is people with big pockets are managing their risk and trying to figure out which side of the market they can wreck the most. And generally, markets kind of repeat in different ways, but they're not predictable, but you can kind of find confluence in structures. And
Insert Mark
the
Twain quote
huh?
here about. I said insert Mark Twain quote about history rhyming.
Yeah, something like that. And the Nasdaq obviously in prior to 2000 was a giant tech bubble, and Bitcoin is a giant tech bubble. So they had similar characteristics right there. We can look at this chart and see that is just this massive thing that went up. It's 100% the same, and then it just nuked very hard. I think, in fact, almost the same amount of percentages. Like this is 83%, and I think Bitcoin
This was
dumped
crazy, wasn't it? Like
around
right
the
around the
same.
same. Yeah. Oh my god.
83%. Get out of here, and then it bottomed, and it pumped a little bit. And okay, I have to admit that that in the dot-com bubble, it didn't bounce that hard. But you have to realize that the Nasdaq is an index. This is an index, so it also had all the the shit coins that didn't bounce. And obviously, Bitcoin is probably more like the Amazon of the Nasdaq. So it had its echo pump after everything capitulated, and then I could, pretty much just use some simple geometry, splitting up this kind of like all-time high retest in the middle right here, and I could do the same with Bitcoin at this high right here. And then we had the financial crisis right here. I don't know if we had something for Bitcoin at this high, but then the Nasdaq came down a little bit, and we had the real shit going on, which was actually the final phase of the 2008 crisis. And that's where Lehman Brothers collapsed. And, we had COVID during that time. This is March, prior to the crash. And they dumped to the same levels, literally. And I just took this fractal, put it on this chart. And then I came across gold, which I actually initially didn't have in this chart. Gold was, I don't know who showed it to me, but gold was pretty much the same fucking thing. It just looks a little bit different. It didn't have the echo pump. It just had this parabolic run here, and then a reaccumulation, and then straight back to here. And we can kind of divide that in a 50-50 split too, which I think this is like the 50 middle of the fib. So yeah, I mean, I didn't expect for this thing to completely keep tracking it. It's not something it's not the reason why I remain bullish, but it's definitely one of the factors why I'm bullish. And then if then price action and other methods kind of say the same, and we see PayPal and we see MicroStrategy, I'm like, dude, I don't know, this fractal is going to play out. So yeah, I'm super bullish, and why wouldn't it repeat the same way? It's a technological innovation. It had a bubble, it had a capitulation catalyst, and there's a clear need for I don't know. I think there is a need for something like Bitcoin, and the market is showing us, because there's big participants flowing in, and there was a big need for tech too. So it might work out the same way.
So, I mean, first of all, if you guys aren't blown away by how scary accurate this is, this is nuts. So, a couple of things I want to comment on, because it kind of lines up well with this chart. The first one being about just the time of the catalyst, right? So, Lehman Brothers collapsing, kind of the last capitulation event after 2008, that whole deal. versus coronavirus. So I know that this is a hotly contested issue generally on Twitter is, show me the news or show me the chart, I'll tell you the news, and other people who think that's BS. They're like, there's no way your chart could have told me what was going to happen in the news, right? There's no way the chart was predicting coronavirus or whatever. What are your thoughts on that? I don't necessarily think there's a right answer, but what are your thoughts on that? Like, do you believe that, priced in might not be the right word, but that, the timing is kind of oddly coincidental?
I mean, the way I see it is that you have input, a process, and output. And that's kind of how a fractal grows. And depending on what happens, depending on the input, depending on the processing, determines the output. So if your input is already very similar, and then during the processing of that information, it kind of starts looking the same. So we had COVID, and I was very aware of COVID. I think much earlier than a lot of people, or at least was scared about it because I was in Asia in early January. So it was happening, and people there were actually really scared. They saw SARS and MERS and whatever. So I was like, well, the stock market is at all-time highs. I was believing that shit had to come down at some point. Everything was pointing towards a kind of something bad happening with the stock market. And then I look at this chart and I'm like, well, we're literally in a place where if we get a bad catalyst, this chart looks exactly the same. And then the input is symbolically the same as it was with the dot-com bubble, basically a tech industry getting insane bubble adoption, whatever, and then a crash, etc., etc. So I was looking for narratives to fit into that whole story about, okay, well, if we're going to do the same as back then we need something shitty. And I was like, well, there is something shitty. It's called COVID, and nobody's believing it. And if nobody is believing it, it's probably worse than we think it is, because if Wall Street is not telling you to be scared of it, it's probably because they're dumping their bags on you before everyone dumps their bags on everyone. The fact that people in politics in America knew about COVID in a way that the general public didn't know, and they, based on that information, they sold millions of stocks before I think Trump or whoever there was in charge of bringing that news, told the general public that it was going to be a very shitty time and that they should be scared of the virus, etc., etc. So basically the inside information was different from the outside information, and I don't know, it just kept adding up, and I was like, well, fuck it, like I can also see everyone being euphoric on derivative exchanges, putting in so much liquidity, just passively buying all that aggressive selling. I was like, well, everyone's gonna get fucked. So it's just building layers and narratives and using technical analysis on top of each other. And then at a certain point, if it makes sense, I just try to find a price action defined entry, and then hopefully, survive and be right. And so I use the same principles, and I just derive at my bias in a little bit of a different way.
It's just layers of confluence, right? And I find that when you have these tops and bottoms form and these extremes in price, usually those are at points of maximum information asymmetry, right? Like you said, the people on the inside in the know, they knew something, the people on the outside didn't know. It's no different to me than, when you see a stop run or you see something like that in price action. There's information asymmetry here. Price is at a premium. It's at a discount. And there's large pockets then propelling price, kind of in that direction. Another kind of thing I wanted to mention about the fractal kind of nature of price. Are you of the mindset that part of the reason these charts look so similar is because they're really charts of human emotion, human psychology, the Wall Street cheat sheet, And when people and price get manipulated, it tends to look the same.
I think these are two very organic charts actually, and they're not really manipulated. I think if you want to have an example of a manipulated market, it's probably more going to be something like maybe gold or um, currencies. But I think that these markets follow similar patterns. Because of just general human psychology being well the same over time. We are very I don't know. We're very emotional. We all suffer from fear and greed, and we're in that sense manipulated by people telling you to be scared of things, and the other way around to like, hey, Bitcoin is going to 100K when it's at 20, and then a day later it's at 10K and you lost half your stack. But what I find most interesting is that if you study GAN or if you study Elliott wave theory, that they link it to the golden ratio all the time. They show the symmetry and the relationship to the golden ratio. And the golden ratio is found throughout the entire universe. It's found in atoms. It's found in even like the distance between the fucking sun and the moon to the earth. You'll find the golden ratio. And it's one of the only, I think it's the only constant that you can keep multiplying with and take like subsections of it and that they kind of like make sense. So and we find the golden ratio in trees, we find it in shells, we find it all around us. So it's almost something way deeper as like a, let's say we're all a piece of code or something, but the universe somehow vibrates or grows with this golden ratio, and we find it in charts, we find it in nature, we find it in the fucking universe. It's in your fucking DNA.
The length of your finger versus the length of your wrist to your elbow, your inner ear shape. It's absurd, and to me, it's like, I think we talked about this about bit in the last video, God versus divine versus just is the universe mathematical and geometrical. I think it goes super deep. I have no idea how long we've been recording for, but
Long.
I know some people had some questions, so maybe let's start going through the people's questions. Then you can maybe kind of just give us a quick summary, say, hey, here's kind of, I mean, you kind of already did up to about 18, 19K, correction to maybe 12K, then 21K. So maybe we can quickly summarize that. We can answer some people's questions. If you have any new books, that you suggest. I know everyone was hitting me up saying, what books did he suggest we read? So if you got any new book recommendations, I'm sure people want to see that. And then lastly, I know you're working on, that new Twitter page, that indicator. So I'd love to kind of hear a little bit more about that. So let's just start with kind of maybe your quick, succinct, here's exactly what Bitcoin's going to do, because we know it's going to play out perfectly, in what you kind of see in the next couple of months for Bitcoin here.
Yeah, at this point, it's becoming less and less clear what Bitcoin exactly is going to do, and also because the end of the year is coming very close. We're reaching into the end of the year right now. It could go in many different ways, but what I do think is that price and time wants to meet each other at around 21,000, 21,000 by the end of the year / early next year. And I don't think it's going to go there in a straight line. I think a lot of people right now are thinking it is actually going there in a straight line. And, if that's going to be the general consensus, it's probably going to fall short of it, because a lot of people think it's going to stop here. Then a lot of people think if it continues, it's going to go to 21K. It's probably going to be somewhere in the middle. So I'd probably say that Bitcoin is trying to go to 18, 19K. Correct. Depends on how long we spend in this range here, whether it's going to become support. But there is a huge support below us towards the 12 to 12.5K region. I would love to see that. If that's going to happen, I'm going to be a full-on bull and scream. I'm going to be buying a lot of Bitcoin, and I think a lot of people are going to call for 5K again. And then I think price is going to be very stupid and trade into 20, 21K by next year, and then one more correction back into this region. By that time, we'll have some support build in this region, because there's literally no support in this gray box right now. There is none. We're filling it now and maybe creating some support, but I don't know. But by the time we break out to 21K, another correction, and then I think we just take off and start doing, stupid shit into the end of 2021. We'll have to see it from. We'll have to take it from there.
Yeah, you even just take a fib from the most recent low to where we're at now. It puts us right around like 11.9 to like 12.2K, kind of that golden pocket 61.8 fib. Okay, awesome. So let's quickly go through some of the questions that people have. Most of the questions are, when can I watch the video? Okay, so can you give us just a quick high level of like, what's your trading routine look like? Do you wake up at a certain time? I mean, it doesn't seem like you're as much of an intraday trader as many people are trying to be, at least on CT. Do you wake up at a specific time, go to bed at a specific time? Are you watching the markets at a specific time? Or are you kind of more a little bit free flowing, high time frame?
I pretty much free flow it. I don't have a routine when it comes to trading. Generally, I wake up when I wake up, and that kind of depends on when I go to bed. When I go to bed depends on what I've been working on, whether I don't know, find myself in a new rabbit hole, or just writing a new indicator, or just reading some shit that just activates me, and then I can't sleep for hours, and then I sleep late, and then I wake up late. But generally, I wake up. I'll first sit behind my PC, check the funding. I'll check the charts, check the levels, and if everything looks, I don't know, okay. If nothing happened that kind of fucks with my bias, I don't do much. I go take a shower, eat some food, and either I have my old company I'm working for now, because I set up a company, I don't know, 8 years ago. We built software together, and then I let them go, and now they need some new things, and they can't get it done. So I promised them to do that. So I spent some time on that. And besides that, I have the truck, so that's taking a lot of my time. So I generally either work a few hours and then go to the truck, or I go to the truck and then I work some hours in the evening. And then I'm just lately I'm a lot outside at the truck, going for a walk, etc., etc. And generally, when I wouldn't have the truck, what I would probably do is be on, I don't know, I would probably go travel right now. And I eat when I'm hungry, I sleep when I'm sleepy, I wake up when I'm rested.
Sounds like
I don't know.
All you people who are spending 25 hours a day staring at the screen on the 1 minute chart should take notes here.
Sometimes I have those days too. Like, I don't know. Somehow I then, like especially when price is consolidating and it's getting squeezed to lower volatility, then I have to like kind of zoom in, and the lower time frames will actually tell something about the higher time frames. So I do that when it kind of gets close to decision time.
About picking your battles, right? Knowing when is it time to pay attention and put in that crazy screen time, but then also know that, hey, the market's trending. This is what I want. I'm positioned, and being able to not be glued to the screen, because I think otherwise, those people who are watching every single day, low time frame, unless you're a scalp extraordinaire like a Salsa, Jules or something like that. Like, I feel like that's a good way to burn out.
Yeah, I would burn out too. But like, good examples would be, I was paying attention a lot as price dropped into that 10K region, and then when price broke out towards the 13K level, I started to pay attention, and I bought some dips there. And then literally as we broke out of 14.1K, I was talking about that level for at least a few days, maybe even a week before it happened. And that's like, I can scream about it, but it also means I have to be in front of my fucking computer if it happens, because I'm not going to put a buy stop there and when it gets wicked, getting into a position. Because literally what happened is, a few days before that, it wicked through 14.1K, and then it dumped to, I don't know, pretty low. So I really wanted to see the low time frames give confirmation of that breakout. So I literally sat on the 15 or the 1 hour chart, looking whether I was believing that was going to break out, and then I bought 14.1k, and then it pumped to 15 the day after. So it's like you say, you have to be aware of where the market is going to become interesting, and then you just got to be there. And that means that sometimes you're a fucking degen and you go to bed at 6 a.m.
Yeah, I talk about this all the time in my videos. As like, one part is marking, levels, doing TA. It's important to know what levels of interest to you want to do business at, and then knowing what you're looking for when you're at those levels. Okay, so we've got a ton of questions here from the people. I don't want to keep you too long, so we'll try and go rapid fire through some of these last questions here. So
I'll do my best.
Yeah, how do you keep such magnificent hair? This was asked multiple times.
Yeah, people always ask me what kind of shampoo I use, and the truth is that I use some kind of organic shampoo that I use like once every 2 months. So the key, honestly, just don't do too much with your hair.
I feel like girls need to learn. Like, maybe I'm completely overstepping my boundaries here, but like I use like a 5-in-1 body wash, shampoo, conditioner, toothpaste, like all in one tube. It's crazy. And then like my girlfriend has like 15 different freaking products. It's so funny. And so many guys that I talk to who have like long hair, they're all like, I barely wash my hair ever. And they've got just like amazing hair. So it's so funny how that's like such a common factor. BTC end of year predictions we kind of touched on. More about the magic voodoo timing lines. If you watch our last video we did together, he talks a lot about those kind of fib time zones, how he pulls them. He also gave a couple book recommendations to check out. Jack, are you a big fan of Store? Can you touch on this product? I've never heard of, or project, excuse me. I've never heard of that before.
Yeah, I'm a big fan and a long time investor. Store is trying to compete in the space of, well, in between crypto and Amazon, basically. They're trying to provide cloud computing on a affordable way. So basically what EOS is trying to do and has tried to do is make sure that we can get cloud computing into a crypto network. And EOS feels terribly because it's way too expensive. And what Store has achieved theoretically and partially in proof of concept is that they can provide this at less than 2x the costs of Amazon. And at that point, it becomes very interesting because the benefits of a programmable cloud is super interesting. And Amazon is centralized, but a programmable decentralized cloud computing network is a lot of money because data is big, computing is big. So if they manage to do that, if they manage to crack this code, because this code is very difficult to crack to make it work in a good way, then they, the upside on the project is insane. I've been following them since 2017, and they raised like a few million over time, just enough to go from milestone to milestone. So that gave me a lot of confidence. They're not in it for the money. They're in it to create actually a fucking crazy super world computer. Things are looking good. Looks like launch is going to happen this year or next year, and it's going to take a long time. They also have a superb governance system where that is off-chain and on-chain. So I don't know. It's one of the new kids on the block. Think Polkadot, think all the other big ones that exploded, but I think this one is just going to explode much harder. I think it's easily a few billion market cap within the next 3 years.
Wow. Okay, so I'm going to make sure to buy some before posting this episode. Okay, cool. So let's see here. What is life like outside of crypto? We've touched on that a bunch. He's building an awesome truck. He's going surfing. He's going to travel around Europe. He drinks beer. What makes BTC unique? We touched on that as well, just in terms of, at the end of the day, it secures money. It's going to potentially could be a, global reserve asset at one point. It does its job well. Price predictions by 2025. I feel like that's a tough one, but it seems like
over a million.
Over a million. There you go. Yeah. Long now. What's the lowest price you think we could see Bitcoin at again? That's an interesting one.
If I'd say know. I think we can easily correct back to 50 to 80k, depending on how high we go. It really depends. Like literally, there's no way of saying how high we go. So that it doesn't make sense to say how low we go.
Yeah.
Maybe, or if you're asking how low we go from here, I think Bitcoin is not going to trade lower than 12k.
Your 3K bids might not be getting filled, guys. I'm sorry. What indicators and other data do you use for defining trend? He's talked about on-chain data. A lot of things we kind of covered organically in this episode. If you could broadcast any song to 7.5 billion people on this earth, what song would you pick? That's an interesting one.
I don't know, man. I'm gonna skip that one.
I'm gonna Rick roll the entire planet and just gonna play "Never Gonna Give You Up" by Rick Astley. Okay, DMT or LSD? Back to the drugs. This is a children's show, people.
Yeah. I have to choose?
Both at the same time.
DMT definitely.
Again, we do not condone drug use.
Don't do drugs.
Yeah, do not do drugs.
DMT is pretty awesome.
Unless you're of age and you're interested in learning more about, the universe, then definitely do drugs, but don't do drugs. I'm trying to get this podcast sponsored, guys. When do you plan on cutting your hair? That's his superpower. That would be like Thor cutting his hair. Why would he ever do that? Do you have any plans on cutting your hair? When was the last time you had short hair?
Last time I had short hair, I was probably 18.
Yeah, so no time soon, guys. Let's see. Any other interesting ones here? There's just so many that are kind of very similar, so I'm just ignoring them. Okay. Any other long-term projects other than Store that you would recommend, or that you not recommend, sorry, but that you have kind of in your long-term bag?
I'm trying to keep some exposure to ETH, especially when we get to swing lows, because there is potential of it becoming very big. There's also potential of it failing, but I want to have exposure at bottoms and just see how high it goes. Other than that, not really. I have, Store is really an investment, and the rest is trading. So if I have to value it as trading, then I don't really have the intention of holding it forever. Yeah.
Okay.
Bitcoin.
Bitcoin. Buy Bitcoin, guys. If you've watched this video and you don't think now is a good time to start owning some Bitcoin, if you don't, or being bullish on Bitcoin and you're not, I don't know, maybe rewatch it again and give your head a shake. So this has been awesome, man. The last thing I'd like to cover, because I feel like we're maybe over 2 hours already, and it sounds like we're going to have a third episode. These are super fun. Here,
absolutely.
Maybe quickly scroll through some of your insane charts just so people love looking at them. That looks super bullish.
Yeah, dude, this is fucking bullish. Like, come on. This is like I don't know what it is.
That's like a
I don't know.
line.
Yeah, I don't know what it is, but it's bullish.
Yeah.
It's like an inverse head and shoulders. I had a drawing on it with more specifics from a while back, but it's basically some kind of weird ass thing. So this is going to go pretty high.
I had the exact same drawing, except for I had the right shoulder further to the left, and I was hoping we were going to get a correction down to like that little consolidation before that move up. Okay, look at this one. What do we got here? This is when you do the DMT, guys. Actually, you do the DMT hours ago, and then you look at this part.
Yeah. Essentially, this is just some geometric way of defining the fact that this is actually not a side. Well, this is actually saying that this is very likely not a sideways consolidation, but a slightly skewed one using circles that are perfectly round. This is again method. And we kind of like we did on the chart with this jar. Let's see, like this jar, we kind of divide it, but then we find an angle on it, and then we take a 45-degree angle from the top here to the bottom here, and that's where we lock the chart on. And from there, we kind of see that the chart is not sideways but upward. So it kind of assumes that price wants to trade into this green circle to end the perfect symmetry. So a lot of people look at symmetry from a specific axis, and here I'm just like, well, let's try and see whether it works from the other side. And so far, I don't know. It's just a cool chart. I can't really use it to trade though.
That looks awesome. What about, do you have that one
There's
that's like,
another chart. I think I loaded it up. Let's see if I can find it. It's a bit busy
that
here.
vertical
Yeah,
accumulation you've always been talking about?
yeah, fucking vertical. This is derivatives versus spot volume as a ratio, and it just shows us that if this is low, that means that spot is dominant, and it just shows us that the entire since capitulation, it's just been spot that's been dominant. So this is organic buying. This is no leverage, extra volume, whatever. It's just vertical accumulation.
That's super bullish, by the way, guys.
That's super bullish. Let's see what else I have. I have a lot of other charts that are in one of my other screens right now. Oh, this is yeah. I mean, we can have a look at this. We can do that at the end. Yeah, here we see the correlation between USDT and BTC, and it's still going up. So every time there's been a lot of printing, price just wants to move up, and when the printing stops, price kind of starts to correct or go sideways. And this was a very weird thing back at 10K. Price dumped, but insane amount of tether was being printed. So that was another reason to be bullish. Like, obviously, a lot of people think that tether is one big scam, but I just see it as if there's more tethers, somebody gave money to tether, and then they have USDTs and they buy
Bitcoin.
Bitcoin. Yeah. This is a way. This is a chart where I kind of tried to predict the steepness of this rally, and I made it pretty much as price topped out at 12.5 right here. It essentially just geometry of splitting a circle in 6 pieces right here, and then kind of using a perpendicular line right here, which lined up with the resistance right here. So generally, I do believe that price then wants to go on a 90-degree angle as it starts to break out. And it's kind of been following this a little bit, but it just hops over to the next one. So, but this is kind of the direction that we're heading in. What's this? On-chain versus spot volume ratio. Yeah, this kind of says that we need to consolidate here a little bit. This is a metric that kind of looks whether there is a lot of on-chain volume or a lot of spot volume. And generally, when there is on-chain dominance, it's very quiet on the exchanges, and prices just consolidating, getting ready for a big move. And when exchanges become more dominant, it generally has this limit right here where price kind of like stops for a little bit. Doesn't really keep on moving, and then it may touch it again, continue to rally. But generally, once you hit these regions here, which it almost has, price just tends to pause for a little bit. So it kind of makes sense with what we're seeing here. Price stopping at like 15 to 16K.
Do you code a lot of these yourself?
Yeah, all of them.
That's awesome. I definitely need to learn to code.
If there is one piece of advice I can give to anyone, even outside of crypto, is learn how to program, because our world is comprised of data, and we're transitioning into a digital age, into an age that is dominated by machines. So if you cannot speak the language of machines, you're not going to be part of the game in 20 years.
My younger brother was entering university 3 years ago now, and one of my younger brothers, and he asked me, he's like, oh, should I go into civil engineering or like software engineering? I was like, software? And it's not even close. So yeah, couldn't agree more. Something I probably need to be a little bit more astute on myself. Let's wrap it up with this. Any other books you are reading right now? Anything you want to recommend?
I haven't been reading anything actually lately.
What about kids don't read books?
I um I come across like random pieces of information on the internet, and then I read a lot. But like actual books, the ones I have that I'm still reading or rereading are the ones I mentioned in the previous podcast. And I don't know, I just don't tend to find the time to force myself and sit down and read a book, because my mind is always full with ideas and I want to research it. So basically, um, I don't know. Unless I know a book has information that I need right now,
Hmm.
I'm going to be looking for a book and then read like 3 pages with the information I want to absorb and then move on. And that's usually just on the computer. So I don't know. I don't log this. I don't keep track of it. I just store it and hope I remember it.
And
Sometimes I don't.
let's talk lastly about the newest project you're working on. So you tweeted out a link to a bot on Twitter that you've coded. It gives support and resistance. It's got a dollar cost averaging strategy. What can give us kind of the high level? What are your goals with this? Things like that.
Um, yeah. So basically, like over the last year, I made a lot of bots. Actually, I have bots that actively trade for me, and they use very different approaches than what we're seeing right now here on screen. But what we're looking at here is a combination of um, I'm sorry, a combination of 5 price models that use, well, 4 of them use on-chain metrics to see about how the supply is moving, and where the bottom of the cycle actually occurs. So where you see the green, it signals that the cycle bottom is in, and where you see red, it kind of signals that the cycle top is in. And if we look back in time, you can see that it pretty much nailed. There's some green here. There's no red here, unfortunately, but it did hit the red band here. And it kind of just tells you about whether price is oversold or overbought in a sense that actually makes real sense. When the price is below this, what's it called? Purple line, then it's undervalued. So a dollar cost average strategy starting from where it's, under it is always a good idea. And then it generates those support and resistance levels, these clusters of lines right here, that price generally tends to interact with over time. So we can zoom in on it and we can pretty much see how it kind of like deviated between these clusters here, broke through the cluster, tested the next cluster, retested it, et cetera, et cetera. And then we have this blue thing here, which kind of illustrates the trend support as well. So when you have confluence on these levels, and the trend is up and it's undervalued, et cetera, et cetera, it's just a very good idea to buy at these supports and sell at these resistances, compounding these moves, and get the hell out of there if the cycle top is found. Go short, a dollar cost average out basically, and start doing the same process over again, buying the bottom and accumulate as much as you can, sell a little bit at resistance, buy at support, and kind of manage your portfolio beyond the level where you're just a hodler. But you're protecting yourself from downside. You're forcing yourself to take some profit. You're forcing yourself to dollar cost average back in as supports are tested, and that way you kind of like prevent from yourself from not selling at the top. You will have sold some at the top, and you will be able to see that the indicator is telling you, hey, this is a cycle top. Hopefully it will do that, because I cannot predict the future. I don't know whether it's going to do that, but there's 5 models in here that each trigger on these highs and lows. So even if 1 or 2 or 3 fails, there is another one that probably, hopefully, is going to say something about it. And what I want to do with this is, there's going to be a lot of new people going into crypto in the next year as Bitcoin is going to go parabolic. And a lot of people ask me the same questions. Is it a good time to buy? What is a good strategy? And they should really not be trading. But if they want to do something, it could be a dollar cost average strategy where they average in and out over time and make very slow decisions based on this. Because if you use this and price goes up here, we see a little resistance cluster right here, which also around the all-time high right here. That's a good place to scale out. And that's between, let's say 21.4 4 and 18.8. So I even use this myself, even as an experienced or more experienced trader. This is really useful for me. We can see how price loves to interact with these clusters as a support, as a resistance, and for me, it's just a good way to remind myself that that price doesn't go up forever, and that there's always good places to buy the dip. And so basically, I want to be buying if price retests the blue here or this cluster here, and price is below the purple line, which is a kind of derivative of stock to flow, a kind of bit of my own interpretation. And that means that if I earn money, let's say I save $1,000 every month, I'm allowed to spend that money into Bitcoin at a rate of once every day or once every week. So I just get an average price of what's going on, and that's just my savings account, whatever. And then I have this trading account where I just scale in, scale out a little bit. So my plan is to make this available for people. It's probably going to be some kind of subscription, and it just should help people understand a little bit about support and resistances when they are starting out. I've made a lot of mistakes in my time when I started out, and if I would have had something like this, I would not have understood the market dynamics behind it necessarily, but it would have helped me to realize that there is a framework I can work with, and I have a strategy that I can deploy to manage my wealth, be your own bank, as I called it, I think on the Twitter account. So I'm really excited. I want to roll it out in a couple months' time, make sure that there's a nice little community around it that people can discuss and ask questions about it, and hopefully, learn a thing or two from each other, and manage a little bit of that portfolio. Don't be, let's say you're new and price dumps 40% out of nowhere, but you see a dump in one of those supports, which I think is going to happen because that's what this indicator kind of does. That would help me to believe that's a good place to buy. But if I didn't know that, if I was new to the market, I would probably sell that bottom being super scared. So that's in a nutshell. That's a pretty big nutshell, by the way. I'm never good at making things very concise, but that's
okay.
That's what it's going to be, and it's going to be a web app. You're going to be able to log in on it on your phone or on your computer and just check the levels and some recommendations regarding a dollar cost average strategy, whether it's a good idea to dollar cost average out, dollar cost average in, whether it's likely that the cycle top has occurred, whether it's likely that the cycle bottom has occurred, where the resistances are. Just simply a little bit of a framework and a strategy to make your time in crypto a little bit more enjoyable, and just take away a little bit of that entry barrier.
Yeah, I think something like this. First of all, you insert the meme where it's Fry from Futurama saying "Shut up and take my money." I'll definitely be subscribing. But this is great for someone who isn't trading full time, doesn't maybe know a lot about trading, and you want to be in crypto, but you don't just want to buy and hold and buy and as price continues to go up, you can add a little bit of dollar cost averaging, very simply, very straightforward. Be a little bit more dynamic with your investment, actually maximizing on some of the swings in the market as opposed to just holding through upside and downside. And it seems relatively robotic. I mean, there's a little bit of discretion involved, but it's hey, if we're here, this is a good time to start buying. You got some extra money, put it in. And if we're here, now it's time to take some profit. So I think a lot of newer people who work full time, a lot of value for something like this.
Exactly. A lot of people are going to come into the space. They won't have time to be trading all day. And this is basically a way to get into what I call positional trading. So you increase positions and you decrease positions, but at a very slow rate. This high and this low right here, they're a few weeks apart from each other, and it's not going to be the golden goose, definitely not. But what we kind of know, what we can kind of follow is that as long as the price is under the purple line, it's a really good place to start buying. Once price reaches into the red cloud here, or it signals a red thing, that's probably that's where I'm gonna be exit out of the market. Literally, and in between that, it's just levels of support. And once this bull market started, and it has been doing that in every fucking bull market, this blue line is the support. And then if it like, you know, intersects with one of those clusters, it's just a lot more confluence. It's just an indicator that it's a lot smarter than RSI or something else. And you're definitely still gonna make some mistakes when it comes to trading, but it's just a guideline, and I think it's a very useful guideline. I'm seriously kind of using this myself as well as part of my bias and analysis, and so yeah, I'm gonna sell this. And I hope I can make it cheap enough if there's enough subscribers to it, and just make a little bit more money on the side, invest it back into maybe some other products. And I think this is just a good way to enter the market. If I had this is a lot of alpha. I mean, the market top, the market bottom, and it just does it a few times.
The amount of times I've like sold spot and then rebought higher, I don't even want to count. So just having, like you said, just another piece of confluence. I mean, it doesn't have to be the only thing. You can use this and then use price action, right? You can layer these things. All right, bro, I don't want to keep you all night. I know it's later there. I feel like this was an extremely long episode, but I think it was super fun, super informative. I had a blast. I hope you enjoyed it too. Definitely want to do a part 3. I'm sure it will be highly requested by people. And I'm sorry I didn't get to everyone's questions, but I find these things just go best when we kind of free flow. So Jack, man, thank you so much for coming on, hanging out, and looking forward to seeing what's coming, bro.
Thanks, man. It was awesome, and I look forward to part 3. Cheers.
Awesome. Thanks, everybody.